Hello and welcome. Today, we are going to tackle a really cool concept in business called goodwill. It's basically the value of something you can't even see or touch, a company's reputation. So, how on earth do you put a price tag on that? I mean, think about it. You've got your favorite local spot, right? A place you always go to. They've got a fantastic reputation. But what's that actually worth in cold, hard cash? Well, that's the exact question we're diving into today. I just love this classic definition. It's so simple, right? It's all about loyalty. But in the world of accounting, this probability, this feeling that keeps customers coming back, isn't just a warm fuzzy. It's a real, valuable, and, believe it or not, calculable asset. To see how this really works, let's jump into a classic business situation. Let's call it the partnership fairness problem. So, here are our founders, Lee and Lawson. They've poured years of their lives into this thing, building it from the ground up. They've got loyal customers, and you can see their profits are on a really nice upward climb. They've built something special. And then along comes Hicks. He sees what Lee and Lawson have built, and he wants in. He's got cash to invest, and he's offering it in exchange for a 1/4 piece of the pie. And this, right here, is the million-dollar question. Hicks is buying into the future profits, sure, but should he get to benefit from all of Lee and Lawson's past blood, sweat, and tears, their amazing reputation, without paying a single dime for it? That just doesn't feel right, does it? This is exactly where Goodwill steps in. It's the perfect accounting tool designed to solve this exact problem of fairness and put a real price on that hard-earned reputation. So Goodwill is all about what we call super profits. It's not just the profit a business makes, it's the extra profit it rakes in compared to a totally average business. It's the premium you get for being awesome. So what creates these super profits? Well, it's a whole mix of things you can't really nail down on a spreadsheet. It could be the incredible quality of what they sell, the fact that everyone in town knows and trusts Lee and Lawson, maybe they have the perfect spot, or even some special deals with suppliers. All these intangibles add up to very tangible value. Okay, so we get the what and the why, but how do you actually slap a number on this? Let's walk through how an accountant would figure out the goodwill for Lee and Lawson's company. Now, there are a few ways to slice this, but two really common ones are the average profit and the super profit methods. The big difference? The super profit method, which is the one we're going to use, is all about figuring out how much better than average the business is doing. And this method is just perfect for our story because it directly measures that extra juice, that premium value that Hicks is looking to buy into. It's the fairest way to figure this out. The logic is actually really simple when you break it down. First, we find their actual average profit. Then, we figure out what a normal business would make and subtract it. Whatever's left over, that's the super profit. Then we just multiply that by a few years to get our final number. Let's see it in action. Okay, step 1. Here are the profits for the last 4 years. Now look closely. See that nice upward trend? Because the more recent years are a better hint of what's to come, we're going to use what's called a weighted average. It just means we give a little more importance to the later, more profitable years. So, after we run the numbers, their weighted average profit shakes out to 136,000 rupees. That's a solid number that reflects their real performance. But to find the super profit, we need a baseline. We need to know what's normal. And that's step 2, figuring out normal. The business has 500,000 rupees of capital invested in it. In their industry, a typical return is about 20%. So an average run-of-the-mill business would expect to make about 100,000 rupees. And this is the magic moment. You take their actual profit, that 136,000, and you subtract the normal profit of 100,000. And that difference, that 36,000 rupees, that is their super profit. It's the extra cash they're making every single year, all thanks to their goodwill. For the final step, we multiply that yearly super profit. The partners have agreed that these extra profits are likely to continue for about 3 years. So 36,000 times 3 gives us our grand total. And there it is. The value of their goodwill is 108,000 rupees. We've put a price on their reputation. So, we have a number. Now what? How do we actually use this to make the deal fair for everybody? This is where a super important accounting rule kicks in. You see, according to official accounting standards, you can't just create an asset out of thin air. Goodwill can only be put on the books if someone is actually paid for it. This is a huge deal. So what does this rule mean for our guys? Well, since their goodwill was self-generated, they built it themselves, nobody bought it, they can't just add 108,000 rupees to their balance sheet as an asset. The only fair way to handle it is to make the adjustment directly through the partner's own equity in their capital accounts. And here's how it all comes together so beautifully. Hicks wants a quarter share, so he has to pay for a quarter of the goodwill. That's 27,000 rupees. That amount gets taken out of his capital account. And where does it go? It gets split right down the middle and added to Lee and Lawson's accounts. Just like that, they're compensated for the value they built. It's perfectly fair. And that's the bottom line. Goodwill isn't just some vague, fluffy idea. It's a very real, practical tool. It's the machine that turns years of hard work and a great reputation into a fair financial transaction, making sure everyone gets what they deserve when a business evolves. You know, this whole process has been about valuing the past to create fairness in the present. And it leaves us with one final thought to chew on. What are the unseen things happening right now? The new ideas, the shifting trends that are building the goodwill of tomorrow.